Hi guys, welcome to this Moneycontrol live stream. You've tuned into IPO Watch on Moneycontrol, and I am Nandita Khemka. Well, today we'll be focusing in on Awfis Space Solutions. The IPO will be opening on the 22nd of May, and the company is looking to raise nearly 600 crore rupees via the IPO. Now, this will be the first IPO by a co-working space provider. The issue will be a mix of fresh issue and offer for sale. Now, to talk more about the issue, the growth and expansion plans, we are now joined by Amit Ramani, who is the chairman and managing director of Awfis Space Solutions. Well, Mr. Ramani, great to have you on the show. First of all, this is the first IPO by a co-working space provider. What really prompted you to take the decision of going public? Because you've got some marquee names backing you like Peak 15, ChrysCapital and ace investor Ashish Kacholia as well. Are you confident of garnering a strong response to your IPO?
Well, Nandita, I think clearly we have built a business which is built on very, very strong fundamentals. I think our focus has been through the 9-year journey on basically creating a platform where people, whoever needs a workspace, is able to get it at an affordable price. And I think that's the reason that we have built almost close to currently as of December, we have 169 centers. We have 105,000 seats, and we are available in 16 cities and 52 micro markets. So I think clearly for us, we created a platform where we could service SMEs, mid-size, and large corporates as well, all under one umbrella. And I think we believe that gives the ability for us to, have the current environment where we could look at the journey to go public. You asked me specifically what the reasons are. Clearly, you get much more acceptability as overall credibility increases, accountability increases, because you're in the public markets. You have to demonstrate results versus purely in the private zone. Gives us expansion capital. Currently, we have expanded over the last FY21 to FY23. We almost had about a 75 CAGR growth in our revenue. We added our number of cities, centers, number of seats, almost at an average of 50% between FY21 and 23. So clearly to continue the journey. And then in the future, if we need more access to capital, that gives us the ability to go out to the capital markets in the future. So those are the fundamental reasons. And clearly, I think we have a lot of teammates that have been with us for a while. This gives them also an opportunity to have something as in currency that is available for them for their future.
Right. There are often concerns that IPOs provide an exit opportunity to PE investors. And since a major part of the fundraise is through an offer for sale, what do you really have to say to allay these concerns, especially since you have increased the OFS component to 12.3 million shares from the previous 10 million shares?
So Nandita, our 9-year journey, we've been very, very fortunate to have some marquee investors backing us. Peak, erstwhile Sequoia, initially backed us in 2017. ChrysCapital, a large PE fund, backed us in 2019. Ashish Kacholia backed us in 22. 4 large family offices are backing us as well, Dalmia Bharat, Havells, SRF, and Jubilant. So we've been very, very fortunate in that journey. If you currently look at the offer for sale today, there is almost, I would say, equal amounts between Peak 15, who's also a promoter, and ChrysCapital. 66 lakh shares are with Peak 15, and about 56 lakhs is between Link and Bisc, which are companies of ChrysCapital. And we believe that even after this exit, they will have a large portion of their shareholding still in the company. And you also have to look at the fact that none of the large family offices, none of the other, me included, are not exiting. So clearly we are committed to keeping the shareholding intact. And as I said, both the PE and the VC funds that are exiting still have almost a very large portion of their shareholdings.
So post the IPO, what would be the shareholding pattern?
So Nandita, roughly broad numbers. Obviously, all of it is disclosed, but broadly speaking, Peak will have about 11% odd, 10 to 11%. Chris will have somewhere around, I would say, 11 to 12%. And then everybody else will have, same level of shareholding. Obviously, the fresh issue will dilute us all a little bit. But I, for example, will have roughly about 17 odd percent
Okay.
post-list.
You are now raising 128 crore rupees via the fresh issue, right? Earlier, the plan was to raise 160 crores, if I'm not mistaken. Why the markdown, if you can explain?
So, Nandita, in all honesty, we are, as of December, we are EBITDA or cash flow positive, right? We have built a model which is very, very efficient. And let me talk a little bit about the managed aggregation model, which we have scaled up to a very large degree. And this managed aggregation model, because if you look at the Indian landscape today, almost about 70% of the commercial real estate market is with HNIs, family offices, and mid-tier developers. And we saw this as an opportunity. And our proposition was under this umbrella of managed aggregation, the term that we came up with, we went and partnered with the landlords. Essentially, our message was that you put in the fresh capital towards the fit out, typically 50 to 90% of it. And essentially, after a minimum guarantee-free period of anywhere between 5 to 13 months, we will give you a minimum guarantee. Till then, we will do a profit share where a large portion of the profit goes back to the landlord. So as a result of this model, we have become extremely capital efficient, right? If in the market, normal circumstances, let's say, would cost 100 rupees, in our case, it would cost only 50, right? So half we have made the capital investment half. And since the landlord is my partner, we have broken the whole message of, the demand and supply mismatch, which was a big challenge in the market, because my landlord is now a partner, right? And obviously, it mitigates the risk to a large degree. As a result, our requirement for fresh capital into the company is limited. And, we got the opportunity, you could reduce it by roughly 20% from the DRHP to RHP. And hence we have done that because the company is putting up a lot of positive cash flow right now as of December, as of the last reported numbers as well.
Let's talk a bit about your business now. In FY23, Awfis's operating revenue more than doubled, reaching 545 crore rupees from 257 crore rupees in FY22. In 9 months FY24, the company reported 616 crore in operating revenue. My question to you is, what really led to such a sharp jump in revenues? And also, despite such a sharp jump in revenues, why have you not been able to make a net profit? You have a history of incurring losses, negative EPS, and negative return on net worth as well. In fact, if I was just going through your peer comparison as well, none of you guys have been able to really hand in a net profit. What could be the reason behind that?
So, Nandita, our growth journey, has been very, very interesting. Post COVID, when we were about 50 odd centers, we decided to take a couple of bets. And one was that we would expand our network, and we expanded that. As you are aware, as of December, we are 169 locations, 105,000 seats from 25,000 seats roughly when, in March 20. And we are in now 16 cities and 52 micro markets, right? Which has been a extremely, high growth curve. Because we expanded our network, our demand ecosystem expanded, and as a result, our revenue expanded. Second, we are probably one of the only, players in the market who has been able to create what I would call as an integrated workplace solutions platform. So we offer co-working. Because we have a large network of our centers, we offer mobility solutions, a meeting room for an hour or a seat for a day. We also offer what's called Office Enterprise, which is a managed office solution where we take up space and dedicate that space to a specific client. We also expanded into what's called Office Transform, which is our design and build business. And here we basically fit out spaces, design spaces, project manage, construct, manage, and then deliver those spaces for third-party clients. And we also have Office Care, almost about 2,500 plus people, guards, housekeeping, pantry, are all on our rolls. So it's the only platform where if you need one seat, I can give you. If you need 1,000 seats, I can give you. I can give it for an hour. I can give it you for 5 years. I can design, I can maintain, I can operate. I can do all of it under one umbrella. So clearly, I think that obviously helped expand our revenue base. We are a young startup. I think we grew in the first 5 years. We tested the concepts and established our network, expanded our base, expanded our client base as well. We during COVID, all of us went through a bit of a challenge, or the industry went through a challenge, commercial as well as co-working. But we have come out of it. We have come out of it. You can look at our numbers. You can look at our EBITDA number, and you can see where we are today. And clearly, we are moving in the right direction.
All right, you're moving in the right direction, but is there a timeline in mind in terms of profitability? Is there a timeline that you're working with?
Nandita, I can't make future projections. You are fully aware. So I will not go there specifically, but I can tell you the growth of the business, right? The model that we have perfected today, 66% of our portfolio comes in managed aggregation, 34 in straight lease. We have expanded into the tier 2 city market, right? So tier 1 city obviously is a large portion of our business, but tier 2 cities, we are in 7. We will add 3 more. Guwahati, Vijayawada, and Coimbatore are on, Lucknow are on the horizon. And so clearly from our standpoint, we feel that the growth and the expansion of the markets is going to drive that. From a demand ecosystem, almost about today, 65% of our business comes from corporates, 20 odd percent comes from mid-size and SMEs, and about 10% odd comes from startups. So I think that's a healthy mix of the customer base. Also, about 56% is more than 100 seats. So there is longevity in the business. There is predictability in the business. The tenure, the average tenure of a customer is about 32 months. The locked-in tenure is almost 23 months. We also, believe that we are servicing smaller cohorts as well. 44% of our business is less than 100 seats. This would be mix of 1 to 25, 25 to 50, 50 to 100 seats. So I think we are servicing the complete demand ecosystem. We're drawing our supply from not just institutional landlords. We are also partnering a lot with HNIs, mid-tier developers, and family offices for that real estate portfolio. So we draw from the complete 850 million square feet that's there. We also, about 20% of the portfolio is coming from retail malls and hotels. So in terms of the pool of supply, I think we are drawing from the largest supply, and as a result, we can service a customer which requires 1 seat to somebody who requires, let's say, 1,000 seats, right? We can do it for an hour, we can do it for 5 years. I think very few platforms are able to do that. For us, customer first approach is one of the biggest hallmarks for us. 70% is our net promoter score. And we believe that with 100 plus hospitality professionals and complete the facility management on our roles gives us the ability to give that consistent experience across 160 centers to our customers, right? And essentially, we, as I mentioned, the platform, once you have the platform, the network effect takes place, right? Today, a large portion of our customers take us for all the different services that we have on the platform. So these are all, areas of growth that we believe will ultimately lead us in the right direction.
Right, you already mentioned that, Awfis has evolved from a co-working network to a tech-enabled workspace solutions platform and provides products across the spectrum of work requirements, right? So what next for you? Any major disruptions lined up?
So Nandita, I think we have perfected some parts. I think we are a work in progress. I will never come and say that we have done everything that has to be done. I think for us, we need to continue to sharpen our model, right? So our managed aggregation model, we need to continue to get better at it. We need to continue to expand into not only existing markets, but also newer markets. I mentioned a few cities earlier. So we want to continue to have the network, and our network is extremely important to us. And that's why, with market leadership, we are the #1 in the country for that. We want to continue to maintain that market leadership with us. We want to get operational efficiency. I think we believe that with the scale, both operating leverage and operational efficiency will come. And we want to continue to deliver for our shareholders. We want to continue to deliver for our teammates, and we want to continue to deliver for our landlord partners. And that's the journey we are on. Will we continue to sharpen the business in every aspect? Absolutely, 100%. And we have done that over the last 9 years, and that's why we are here because of that. And we will continue to, make innovation into various aspects of our business to continue to get better at what we do.
Couple of more questions. What really, according to you, differentiates you from your competitors? Because you're competing with the likes of WeWork, SmartWorks, and Tablespace. Any differentiating factor that you would like to point out?
So, Nandita, many, not just one. I would say there are many. I will just highlight one is the network. 169 locations. You have all the data in the RHP, so you know the others, how many locations they have. So I think of it like, a customer who requires one seat. He needs it right now, right? I mean, he wants it. And clearly, in this distributed work, in this whole journey of evolution of return to office, mix of hybrid, right? Some days in office, some days from home, some days work near home. Network plays a huge role, right? And we have the market leadership in that network. And as a result, I'm servicing 1 hour of meeting room to 5 years of 1,000 seats, right? I mean, that's the power of the network. Second, the supply model, right? If you are completely in a straight lease model, there is a demand and supply mismatch, right? People come to us, the demand ecosystem comes to us because of flexibility, right? Nobody is coming to us to give, there might be exceptions, but nobody comes to us giving us a 5-year lock-in typically, right? These could be a day somebody uses us to, if we are lucky, could give us a 3-year lock-in, right? So I believe the supply, you have to mitigate the risk in the supply. And we believe by partnering with our landlords and creating capital efficiency and essentially mitigating it by not giving a fixed rental, I think we have a very unique model that we have curated, unlike anything, at least what I'm aware of, that's out there. Third is the demand system.
Right, go
Demand,
ahead.
a lot of people, a lot of the competition has moved into plus 100 seats. We have a healthy mix of both. And clearly, I think the net promoter score, I think we deliver for our customers, and that's why they love us and they continue to, reward us by giving us the opportunity to service them.
So would you say that the demand-supply mismatch is the biggest challenge for co-working space companies in India? Any other risks or challenges in terms of the entire space that you're operating in?
No, so Nandita, we are a product of the commercial real estate market, right? I mean, if obviously the risk is that if the commercial real estate market has some headwinds, then clearly we will have some. But if you look at the COVID scenario, actually we got wind beneath our sails, right? We got the industry expanded, right? We went from 25 million square feet to today almost touching 60 million square feet of that 850 odd million square feet of total commercial real estate. So I think clearly at this point, I think this industry is well established. But I think inherent risk, at least the way we have seen it, was in the demand and supply mismatch. And we believe we have been able to mitigate that to a large degree. Rest, obviously, economic challenges or commercial real estate headwinds, all of us will have to mitigate that. But I think you have to build resiliency in the business. You have to build tenacity in the business. And I believe we've been able to do that at Awfis.
All right, that's the word then. But I'm afraid we're running out of time. Mr. Ramani, I would like to thank you for taking out time and joining in and sharing your thoughts with us. Of course, all the very best for your IPO that opens on May 22. And of course, looking forward to having a conversation with you after your listing as well.
Sure. Thank you, Nandita, so much for your time.
Thanks a lot. Well, of course, with that, we've come to the end of this edition of IPO Watch. Awfis IPO, watch out for that. It opens on the 22nd of May and will close on the 27th of May. 600 crores, that's the amount that the company is looking to raise via the IPO. But with that, completely timed out. Thanks a lot for tuning in. But you guys stay tuned to Moneycontrol for all your other news and updates.